Welcome to another episode of Rich Dad StockCast, the podcast for people that are serious about improving their financial education. I'm your host, Denney, and today we're diving into a topic that could make or break your financial future, and that's the biggest mistakes investors make and really how to avoid it. So whether you're a beginner or seasoned investor, mistakes can cost you, but what if you could avoid the most common pitfalls that keep people from building true wealth? And that's what we're tackling today. Now, joining me today is none other than Rich Dad expert Andy Tanner. Andy, welcome back to the show.
None other, huh? It's
None
great to be with
other.
you. Great to be with you, Dell. Excited to dive in. This is a great topic, and if we can learn from the mistakes of others and me, people can avoid a little bit of pain. So that's great.
Fantastic. Now, let's start with this. Now, before we jump into the conversation, I do want to ask a question here. StockCastBonus.com. There's some resources in there that might be good for this. Can you tell us a little bit what's in StockCastBonus.com?
Yeah, I mean, people who have an interest in financial education, you really want to get your hands on everything you can, and I look at one of the things about Robert Kiyosaki I admire. He's an insatiable learner. I've never met anyone that wanted to learn more. So today, at least for this episode, if you're watching recent, on StockCast Bonus, we're giving away an ebook called The Power of Six. And the reason it's called that is there's 6 numbers that'll change your life. What you focus on expands. And, my wife and I, we go through 6 numbers in our life once a week. And we say, what's this number? What's this number? What? And there's 6 of them. And if you set goals for those and you pay attention to those, you monitor those, it just automatically makes things go better. And when I say they change your life, I don't mean that just lightly saying, oh, life changing. It really does have a practical, applicable, real impact starting your very first day. Your very first day, it'll change you. And so pick that up. It's free and life-changing stuff. You want to know what those are, how to change them. And when you see the power in those 6 numbers and organizing them, absolutely life-changing. So that's what that is. And invite people to go full throttle because it's free and check it out. So there you go.
There we go. Fantastic. I love it. I'm going to dig into it. Now, let's talk about mistakes.
Yeah.
There's it's easy to make mistakes in the stock market. One mistake could kill you, but there's so many to make. But if you had to just think like off the top of your head, what's the biggest mistake investors make at the get-go?
Well, I often get that question directed towards me, and they'll say, Andy, what was the biggest, mistake you made, or what are a list of your top mistakes? And I says, well, how much tape do you have in your camera? How much memory do you have on your drive? Because my life has been a life of mistakes. They often say the game of basketball, it's a game of mistakes. Kobe Bryant has an interesting record. I think it still stands. He's a lot like Babe Ruth. Babe Ruth had the most strikeouts of any guy who had played in his day. I think Kobe still has the record for the most missed shots. So he took a lot of them, and he missed more baskets than anybody else. So life is, if you're anything like me, life is about mistakes. So when it comes to investing, what are some of the big ones? I think one that I would put towards the top list, I don't know if it's number one, I'd have to think about it, but I think people have a tremendous lack of respect for financial education. In other words, and I was guilty of this. For example, my wife and I really got serious about investing when we read the book Rich Dad, Poor Dad. And so this was back in the 90s, and we were fortunate to be among those who heard about it pretty early. So a friend of mine recommended it to me, and I read it. And Marcy and I were like, oh, it was almost as if you go to the grocery store and choose to buy different stuff than you bought before. Oh, I see. Instead of buying liabilities, we should buy assets. Oh, okay. All right. That's fine. And we failed miserably because we did not understand that there's a totally different mindset. And so maybe it's investing with the wrong mindset. Maybe it's not getting your mind right. I look at it as a lack of respect. I was on a flight once to Atlanta, so I got about 3.5, 4 hours. And I just about had my noise canceling headphones on, settled into my seat. And the guy next to me decided he wanted to chat. And I was like, oh boy, here we go. And so he spent 3 hours telling me what a brilliant surgeon he was and how much education it took, and 20 years of school or whatever it was. And he was going to talk to these thoracic heart surgeons, and told me how amazing and how hard it was to get where he was. And then when we finally were on the final approach into Atlanta, he said, "So what do you do?" I said, "I'm going to I'm going to investing conference. I'm going to speak investing conference." And he goes, "Oh, so give me some tips." And I wanted to say, well, I'm thinking about removing my own bicuspid valve and replacing it today. You got any tips for me? Just a total lack. The guy had spent 3 hours telling me how brilliant he was. Total lack of respect. So I'd say number one is people, if they're going to move from an education that taught them to work for money to an education to have money work for them, to just flippantly say, yeah, I think I'm going to go out and buy a bunch of stuff, and that would be, simple, easy, no knowledge needed. I'd put that really towards the top of the list. Is there is a mindset, a discipline, a temperament. It is a personal development change where you develop yourself into an investor. It's like Robert Kiyosaki. I've heard Kim Kiyosaki talk about this. They have a thing called be, do, have. And the mistake is that people don't respect the be. They just want to get straight to the do so they can have. And they say, what do I need to do so I can have this stuff, right? I want to have this wealth. What do I need to do to get this wealth? And they don't have a respect and an appreciation and even a reverence for what it means to be somebody. Before you try to do something, you got to be a lawyer before you do litigation. You got to be a surgeon before you perform surgery. You want to be an investor before you do investing. And so that respect of who you are going to become and the reverence for the mindset of it and who you're going to be, I think that's one of the larger ones that I see people make. I know I made that mistake, and I have to continue to avoid it.
Speaking of being an investor, I remember, we met. I know exactly when we met. We met 20 years ago, 2005 in spring, and we're hit 20 years. It's crazy to know you that
Oh my
long. But
gosh.
I know,
Where'd the
right?
time go?
Ah,
Yeah.
went quick. But I remember, I just read Rich Dad Poor Dad. You could quote, like, it was like the Bible. You could quote from Rich Dad Poor Dad. I loved it. And one of the things we talked about was buying assets. And you
Yeah.
told me about that mindset shift. And you're like, you have to make it a game to want to buy assets. And that just has stuck with me for the last 20 years. It's got to be a game. Now, as you think about maybe being a stock investor, you first have the change of being an investor, but when you think about being a trader or buying stocks, what's the biggest mistake someone makes when they get into the stock market?
Yeah. So there's two. It's probably a tie, I think, for stock investors, and it's particularly bad. It's not as bad in real estate. It's particularly bad in stocks and in crypto. Is people fall into a culture of advice rather than knowledge. So what they think it is, it's about getting good advice. And this is why Wall Street, this is the this is such a problem, because Wall Street would have you believe that you're too stupid to learn how to do this, that you wouldn't be able to learn it, that it's not a learnable skill for you. And they want you to believe that they have some strange ability to predict the future, and so they know how to invest properly because they know the future and you don't. Well, nobody knows the future. The defining characteristic of the stock market could be argued that it's the unpredictability of it. And so what the culture of advice is simply this, and we get this 10,000 times, a podcast, it seems. Just go watch if you watch the Rich Dad radio show with Robert Kiyosaki, and if you watch he has this little segment that he used to do called that he would do called Ask Robert, and people are asking for advice. They're not asking for education. You could ask for education. You could write a question in that is about learning, but it's never like that. You can, I'll say 9 times out of 10 or more, the questions, and you can kind of watch Robert just go crazy sometimes on it because it drives me crazy. Robert, if you only had $10,000, what would you buy? And if he says, go buy a Bitcoin, you haven't learned a thing. If he says, don't buy Bitcoin anymore, we haven't learned a thing. Go buy gold, haven't learned a thing. Don't buy gold, haven't learned a thing. So people just, that's a lazy attitude. And it's really a something for nothing attitude. If you think about it, give me a fish. I don't want to bait the hook. I've heard, it sounds like, I don't want to bait the hook. I don't want to go down to the lake. I don't want to learn to cast. I don't want to learn anything about fishing. Just give me a fish. I don't want to do any work. Just tell me, I just want free money. So I have some cash here. I want more free cash. Tell me what to buy that'll automatically give me cash. And the reason is people don't understand that's not how investing works. It's certainly not how cash flow works. It's not how businesses work, and stocks are businesses. They're a piece of a business. They change, they adjust. What are your goals? What are you trying to do with crypto? So I would say that there's kind of a tie. The first problem is people seek advice rather than true knowledge. For example, if I were going to ask Robert a question, say, "What's the last class you took?" On learning. What's the last course you enrolled in, and what were you studying? What are you studying right now? I mean, wouldn't that be a great question other than what to buy? What are you studying right now? What are you learning about right now? Because if you're learning about it, I probably want to learn about it too, right? I want to copy you. The other one, the other huge mistake, I think, and this gets fed by CNBC, is people, they don't understand that the difference between hedges, cash flow investing, and capital gain. The world is all capital gain. They don't understand cash flow. They don't understand how to invest for cash flow. They don't understand. They just want to buy low and sell high everything. Everything is the real estate market going up? Is Bitcoin going up further? Is this stock going up is the stock market going up or down? And this directional approach of whether things are up or down totally removes cash flow investing from the conversation, and most importantly, removes it from their mindset. So I would say, there's a lack of respect for financial education and the learning that goes on. People are lazy. They want to skip that part, and they want to go try a case without getting a law degree. They want to go do surgery without a medical degree. That'd be unheard of. You couldn't go be a police officer without the police training academy. Any occupation of any kind of sophistication at all is going to require some know-how before you do it. And for some reason, people, when it comes to investing, they'll read a chapter, Rich Dad, Poor Dad. Well, I'm just going to go buy everything. I'm just going to go invest. So that's why that advice culture reigns supreme, is laziness, frankly. If I can offend people, I guess if they're offended, they're offended. But if you say, Andy, tell me what to buy, you're trying to bypass your learning process and just go push a button and make a purchase. And then the third one, I think, really it's a capital gain mindset, where success comes in a cash flow mindset. I think capital gains are really hard to do consistently. Cash flow, much smarter way to compound, I think. So there's 3 big ones right there.
Those are good right there. I love those. Now let's do this. Let's take a quick break. Listeners, we've just started exploring the biggest mistakes investors make and how it could really be holding you back for building your true wealth. But when we come back, I'm going to have Andy share some practical strategies on how to avoid these mistakes, but also how to set yourself up for financial success. Stay tuned. You don't want to miss this.
So far, it's been great. I needed a source where I could really enrich my education through stocks. I didn't really have an avenue for it, and it's helped me a lot. The simplicity has really gotten me on the track to where I enjoy the learning as well as it's really solidifying in my mind. And like, they're not just trying to sell you something, they really care about the people that are in the course, and they really do care about you and your personal goals, and what you want to do is to help you and your family and whatever your goals are in life through that. So it's really been great.
All right, welcome back to Rich Dad StockCast. I'm your host, Denney, and we're here with Rich Dad expert Andy Tanner discussing the biggest mistakes investors make and how to avoid them. Now, before we dive back in, don't forget to visit StockCastBonus.com for free tools and resources to supercharge your financial journey. Now, Andy, let's move from theory to action. When we think about other mistakes that people make when it comes to investing. We've talked about education. We've talked about capital gains, cash flow. What are other mistakes that investors are making that we really should be aware of?
Well, one mistake leads into another, and that's a very common thing. You know, I hate to always infuse my sports metaphors or examples, but it's my background, so it happens all the time. But you don't want one mistake to turn into another. You know, when you're playing a football game or a basketball game, you can get in those quicksand of mistakes pretty fast. And so one mistake leads to another. And that can happen with dishonesty. You know, it's very hard for people to tell one lie in isolation, because usually it starts another lie to handle that lie. It's just you start to see people that just crumble. And so you don't want one mistake to become another one. You don't want a small mistake to become a bigger one. So let me give you an example. What happens when a person takes the advice route? Wall Street is built on the concept of advice. This idea that because you can't learn this and only I know how as a Wall Street guy, you need to give me your money and you need to have me manage it. You need to have me make all these decisions, and I'll give you the advice and I'll tell you where we're going to put this money, and you're going to pay me a fee. Now, let me give Warren Buffett's words in this. And if you listen to him and study him, he's all about compounding. And he's absolutely correct. This is mathematically true. This is unavoidable. He says 1%, even 1% is enormous. And he's not just saying that. If you get out a compounding calculator and you look at your investing over a lifetime, because that's what you have one lifetime. Maybe you start investing around 20 and you die at 85. So you have 65 years to engage in this compounding, this wealth building process. 1%. Do a compounding calculator and play with 1% up or 1% down and see what the difference is. You know, see what compounding at 10% would be. Then see compounding at 9 or compounding at 8 or whatever. Just look at 1% either way, and it's just enormous. Well, if you give your money to Wall Street and you pay a fee, it's not, you can't look at it like, oh, it's 0.5% or it's 1%. You know, that's not a very big fee. They're stealing your compounding power. They're stealing the rate at which how fast you can compound. And when you look at compounding over the course of a lifetime, this is $1 million or more. This is millions of dollars that they steal in growth and compounding, and they get away with that by putting you in stuff that mimics the market. It's crazy. Why would you give up an enormous amount of that wealth to simply do what the market's going to do, which leads to another mistake called diversification. It's a huge mistake to believe that you're I mean, you know, I don't like naming names of people that I disagree with, like Dave Ramsey. But you know, when he talks about diversification, the more I've kind of been listening to him recently, and I'm like, how did he make it? You know, the idea that diversification manages risk is just nutty. It enhances something called systemic risk, and Warren Buffett will tell you it is a confession. This is a quote right from me. He and Munger would say it's a confession in our view that you don't know what you're doing. So I guess if you don't know what you're doing, go diversify. But that comes back to what? Not knowing what you're doing, right? to engage in something with no education. Well, if that's the case, then I'm going to diversify. I'm going to pay 1% for people to give me what the market would give me anyway. That makes no sense. So, is it a mistake to put money in a fund that's managed by Wall Street? Well, I guess that's a matter of opinion. And maybe it's better than doing nothing, but I think it's a huge mistake if you're serious. I've never seen anyone go from poor to rich doing it that way. I've seen people who are highly paid do okay, but I never saw anyone who didn't have any money in their pocket to speak of, or on the low end of a job working for money, go through that and get wealthy. I've not seen it. I've not seen it happen. Statistically, when you look at the reports like Vanguard, How America Saves, it's proven out that it doesn't fly. So don't let a small mistake go into a big mistake. And if you have no education, you're gonna wind up in places that steal all your compounding. That's a huge mistake.
That it is a huge mistake. And I do want to kind of parlay that thought into thinking about retirement. And then I want to talk about actionable steps. As you think about retirement, and you've talked about this, you hinted a little bit about having other people manage your money for you. What would be another big mistake people are making with retirement?
Well, I don't think they plan for it well. I think that if you were a construction guy and you showed up at a job site with your hammer and your saw and your lumber and just started building with no blueprint, without a vision of what it takes to build that house, how long it would take, what it would look like, what you really want, to go to a job and have a portion of your paycheck just stowed away and say, well, that's my retirement, without any vision of, well, what's it going to look like, and what are the risks you're taking, and is it going to make it in time, and are you doing it at a sufficient rate? Out of sight, out of mind. That's a huge mistake. Actionable stuff, other things that people do. Here's a huge mistake, is to sell your assets out of fear and emotion when other people are selling. Like, for example, let's say when COVID hit, you should have been buying, not selling. In fact, if you were to look at the major crashes, I was speaking with a mentor of mine just Sunday about this. Great mentor, one of my very first rich dads in my life. I was thanking him, and he and I were talking about those low points. And I was particularly talking about COVID, where when the market falls, you got to be a buyer because it's cheap. And if you look at a stock chart of your own lifetime and you just pick the 4 lowest dips during your lifetime, it would reveal the absolute best time to be buying. And so when people are selling, why, if Black Friday comes along as a consumer, people are waiting in line to get in the store and buy stuff because prices are going to drop. And they know that. So why would it be different with assets? And so it's a huge mistake to sell really good companies when you can clearly see it's just panic. Now, if the company's fundamentally flawed, you got to leave. You do. If it's fundamentally flawed, and if it's Blockbuster Video, that's not emotion. That's a crappy business. It's going away. You got to get out of that thing. It's called obsolescence risk. The balance sheet's jacked up. The growth isn't there. They're not doing anything to innovate. That's a reason to leave. But if you just look at price in isolation and you sell because a price is falling, you got to look at what the underlying asset is. And if there's no problems with the underlying asset and that price drop is merely emotion, you're crazy to let that go. You should buy more. You should buy when prices are low. That's why I love crashes so much. I mean, why wouldn't you root for prices to go on sale? So that's another huge mistake, is to sell by looking to let a price inform you rather than the underlying business inform you. Why would a dropping price inform me to sell? That's crazy. So again, that's a lack of education. Also, temperament. If a person can't watch that thing go down 50% they don't have the temperament to invest. And that's not me. That's Charlie Munger, the late Charlie Munger. It's just how it is.
I love Charlie Munger. His quotes are
hilarious.
amazing. Yeah,
Hilarious.
amazing man. So let's talk about action items. Okay, so let's say, I love that idea. Black Friday. Hey, when Black Friday comes, I know I'm saving my money. I'm waiting for the sell.
Can't wait.
How do I do that?
With
How do
right?
right? Especially my wife, but we won't say anything about that. Now with the stocks, okay, things going on sale. We know it's coming. What do I do? Like when do I know? How do I do?
Well,
like when it comes to education, like what's the mentality I need to have?
I will tell you this. This is very fortuitous, and it's a great opportunity to pitch that again. I would tell people, start with the Power 6. Go to that website and get that and do exactly what it says, because my wife and I, it's going to show you how to have the meeting. My wife and I have a meeting once a week where we go through the schedule and we go through the numbers and see where those 6 numbers are for us, and how are we going to change those numbers. When you start with that kind of focus, then you're going to build what's called a blueprint, and you're going to build the blueprint before you build a building. You're going to have a plan that you follow. So in sports, you want to have a game plan. In construction, you want to have a blueprint. If you're imprisoned, whether it be a figurative financial prison or a literal prison, it's an escape plan. If you're going to war, it's a battle plan. And great plans resemble all those things. They resemble building plans. They resemble battle plans. They resemble escape plans. They're really intense, focused plans. And if you can have a plan, that's a huge thing. Now, another type of plan that's involved is a contingency plan, a plan B. Many people have no plan B. So, this is above people's pay grade for most people, but one of my trainers at the Cashflow Academy, his name's Noah Davidson. And one of the best classes he created in our academy, it's not for beginners, so I probably shouldn't be talking about it, but it's an intermediate level class called the Adjustment and Repair Playbook. And what it does is it takes care of the future. Because what you do, if you want to be prepared and be able to see the future, it's not that hard to see, because you're going to live in one of 3 universes. Starting today, if you make an investment, you're one of these capital gain up and down guys that worries about it. Well, the stock could go up. So you make a plan of what you're going to do if it goes up. The stock could remain stagnant, the same. So you make a plan of whether it's going to stay the same. The stock could fall. So you make a plan of what you're going to do when it falls. Now, there's no need to be afraid of the future, because you've covered all 3 and you know exactly what you're going to do unemotionally without freaking out. And you have a plan for this stuff. And so that's very actionable. So you start with a Power 6 and you have the meeting with your life partner, or, if it's you, right? If you're flying solo, which is fine. And you plan that sucker out, and you have part of that as an education plan, a battle plan, an escape plan, a building plan, a blueprint plan, a contingency plan. The components of your plan are going to help you avoid most of these mistakes. And then you work your plan, and you don't let the emotions or the ignorance of the day deter you from what you're doing. Get planned, get organized, get disciplined, get smart, and you'll avoid a huge amount of mistakes. Now, last thing I'll say, do I still make mistakes despite all of this? Yep, absolutely. But I will tell you, the mistakes I make nowadays are so much less painful than the early days of ignorance or arrogance or whatever. There's a humility that's taught by making mistakes, and you're going to make them. And mistakes are wonderful lessons, incredible lessons. Even some of the ones where they've been expensive for me and they've cost me a lot, a lost business, or, whatever you want to pinpoint and talk about. Incredible learning, absolutely learning that does not occur in school. So the biggest, maybe the biggest mistake to finish with is to be afraid of making any mistakes at all. There's certainly, you can learn from others, you can avoid some of the big ones, but you're still going to make them. And I told my son, he's getting all emotional in his basketball game because when he missed a shot, his body language was just bad. I said, son, if you're going to play this game at all, let's say you're going to play another 5 years, you're going to have a turnover. You're going to have a turnover. You're not going to be turnover free. You can reduce the amount of turnovers. You can reduce the amount of missed shots through shot selection and having good foot organization and, being ahead of your pass. I mean, there's a lot of stuff we can do. But even with that, you're going to miss a foul shot again. No one shoots 100%. So are you going to quit? Or are you going to say, okay, when I make a mistake, how am I going to react to it? And how am I going to keep one mistake from turning into 2, 3, and 4? And how am I going to make a smaller mistake from growing into a bigger mistake? And that's a huge, huge deal. So you're going to make them. So get used to that. And just know that you're going to have a loss somewhere in your investing if you do it at any appreciative time. I don't know anyone that's gone A to B perfectly every time without mistakes. So you're going to have them, but avoid the ones that are obvious, avoid the ones that are huge, and learn from your mistakes and learn from others. But you're going to make them. You're just going to. So get used to that.
There you go, Andy. That's awesome. Like I couldn't agree more. And unfortunately, I feel like we could go so much more in depth in this, but we have to wrap up the show. So guys, that's a wrap for this episode of Rich Dad StockCast. Now I hope you found this conversation insightful, because I know I sure did, and it gave you the tools to avoid some of those investing mistakes that people go through, right? Andy, thank you for your wisdom, your insights. Always a pleasure to have you on the show. Now remember, financial success isn't about luck. It's about education, strategy, and consistent action. If you want more free resources on how to elevate your financial game, visit StockCastBonus.com. Again, just like Andy said, it's all about having a plan. And I think if you fail to plan, you plan to fail. So get your plan. Go to StockCastBonus.com. And if you've enjoyed this episode, be sure to like, subscribe, and share it with someone who could benefit from this lesson too. Thanks for tuning in to Rich Dad StockCast. I'm Denney, and we'll see you next time. Stay smart, stay invested, and take control of your financial future.
This podcast is a presentation of Rich Dad Media Network.